Welcome to the latest Motley Fool scoreboard. I'm Anand Chokkavelu, and we've got longtime fools Jason Hall and Lou Whiteman giving a 1 to 10 rating to a top 20 stock in the Moneyball database. It's Smart Water Meter Company, Badger Meter, ticker symbol BMI. First, we'll rate the strength of Badger Meter's business, including factors like industry and competition. A 10 is invincible, a 1 is hopeless. Jason's at an 8, Lou's the Grinch at a 6.
Yeah, I hate to be the Grinch about a company with the guts to try and put meters on badgers, right? Or no, wait, that's not what they do. God,
they put badgers on meters.
Well, that's even harder, right? Badgers are fierce, but actually, reading about it, Badger provides flow measurement, water control technologies, basically water meters, and they've done this for more than a century. The latest thing now is they are part of a huge upgrade cycle with smart meters, with municipalities trying to kind of get rid of the meter reader and take care of all of that digitally. Stock is up 200% over the past 5 years, thanks to a rush to kind of get these smart meters into place. My downside here is there are limits to that upgrade cycle, and there are limits to new housing. So there is just kind of a natural box for the business. Solid company, good at what they do, good at using M&A to broaden its reach. But given the limits, I ended up at a 6.
Yeah, I think consolidation and M&A are probably the most important drivers over the long term. They're hard to do well. And a lot of times management gets compensated out of line with the things that drive compensation for shareholders. I'll say something they've done with, we'll talk about with management. They've done some things that I think do kind of align some per share value creation that have driven free cash flow and per share value over time for shareholders.
For management, a 10 is Warren Buffett, a 1 is Homer Simpson. Lou likes these guys better on management. Both of you have an 8.
Yeah, so I think Jason's going to hit at it, but Ken Brockhurst has been in this chair since 2019. Little has gone wrong. M&A is a big part of the story. M&A comes with a lot of risk. The fact that they have been actively doing this and it seemingly has helped performance and not been a roadblock, that drives the score for me.
Yeah, I agree. Like I said, less than a decade. There's things about the bonus structure that aren't perfect, but directionally are aligned pretty well. Adjusted EBITDA, that's a little questionable, but there are aspects of it that are good. And then absolute free cash flow versus free cash flow per share. Not perfect, but they're not empty calorie measures like just revenue growth, because you can spend $1.10 to buy $1 of revenue. And they don't do that. If you look at the trends on their margins, operating margins, net margins, the results have been extraordinarily good, and management is pulling the levers really, really well.
For financials, a 10 is a fortress, a 1 is yikes. Jason's at an 8, Lou, you're at a 7.
Fantastic balance sheet, first of all. No debt, 160-something million in cash. Strong recent quarter, sales up 13%. Even backing out M&A, sales up double-digit organically. Decent operating margin, 22%. There's goodwill on the balance sheet, and I expect the cash to go into further deal making, which, both which could be seen as yellow flags, but they do this well. Really, no complaints. A very solid 7.
For a company that's been pretty active in M&A to carry no debt, that means they prioritize the balance sheet so that they can strike deals quickly, generally at favorable terms. And then you look at the operating results, consistently earned, even though the gross margins aren't necessarily high, it's consistently earned double-digit net margins. And we've actually seen them move into the low teens, since the current CEO took charge. So we'll see if those hold up, if it's the upgrade cycle, or they're able to continue to get those higher margins over the long term.
Jason, let's talk valuation then. How well will Badger Meter's stock do over the next 5 years? It's been a decent run the last 5. And how safe is it? 10's a sure thing, 1's a lottery ticket.
Yeah, Lou and I both came down on a 7 for a safety score. It seems like a really safe business to hold over the long term. I think this is where we differ. I think it's probably on the higher end of 5 to 10% per year in returns. We talked about the strong business, the balance sheet, the returns and the margins that really are pretty surprising to see for a business like this. But it's not particularly cheap. Trades for 41 times earnings, 35% free cash flow. Revenue growth was just around 10% last quarter. I don't think it's going to be able to sustain growth rates above 10%. That's going to make it hard to grow earnings per share over the long term at rates that are worth 41 times earnings.
Yeah, the issue here, like Jason says, it isn't the business, it's the valuation. The stock has come a long way. It's highly valued. There's a potential for municipality spending to slow down with everything going on the federal side. No real sign of when housing construction will rebound. I think it's a market performer, and that's where I end up. And as Jason said, no one's going back to dumb meters. Their established base should drive replacement sales. It's a very solid business. It's just a question of can it beat the market over the next 5 years.
Thank you to both Lou and to Jason. They've given Badger Meter a pretty solid overall score of 6.9 out of 10, with Jason being a little higher on Badger Meter than Lou overall. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Louisiana Pacific. Till then, Fool on.
If only they did what they said they did. I mean, how cool would it be a business? Oh, well, we meter badgers.